on, Carl, talk a little bit about stuff back home. You've said in the past that you think the Fed will go back to zero rates or close to zero rates as the U.S. economy slows. So do you expect that to start next week? And how effective will rate cuts be this time round?
Yeah, I mean, we believe that the rate cuts are less and less effective. Once you've been at a zero rate bound, the rate cuts have less efficacy than they once did before you ever got down to that level. So it's a great question. I think there'll be less efficacy. I think that, as you heard in Powell's last press conference, a member of the press asked him, if he believes in this ideology of, to the extent that there's going to be a slowdown, they have to be more aggressive sooner to get the intended effect. And Powell tended to agree with that statement. And I think you're going to see, to the extent that we see softness in the U.S. economy, which, when you look back to yield curves inverting, it typically takes, call it 9 to 14 months before you see the resultant effect on the business of let's say, the economy. And so I think you're going to see in early 2020, you're just going to see softness in the U.S. economy. And if you look at the PMIs of Europe, and if you look at what's gone on in Asia, and China just reported, the slowest growth rate that it's ever disclosed in the last 35 years, the world's slowing down a little bit. It's not a financial crisis like 2008. Well, we might have a shallow recession, but if we do, we will immediately go to zero rates.
So what do you do? Buying treasuries, selling the dollar, gold?
Yeah, I mean, I honestly think what we all have to do is think about, the best way to defend your investments in an environment like that is to buy long duration assets, i.e., you want to own apartments, you want to own office buildings, you want to own long bonds, right? One of my friends joked with me recently and said, you buy bonds for capital appreciation these days, and you buy stocks for yield, and I think that's what you're seeing. That's why you're seeing stocks go straight up, and I think they're going to go up more and more as Treasury yields come close to zero.
But that's interesting, Carl. So you're bullish on U.S. equities, it sounds like, but you're fairly bearish on the U.S. economy. How long, if both of those things play out, how long can it last that equities outperform in a recessionary environment for the economy?
Yeah, I mean, if I knew the answer to that, Wilfred, I'd already be on the beach. But I think that you're going to see. Just look at Japan. In Japan, they've bought more than 100% of their GDP in their bonds. They own 75% of every listed ETF. The Bank of Japan owns them. The Bank of Japan's become a top 10 holder of 4 of the largest companies in Japan through their ETF purchases. And guess what? They just keep going. And so you even heard a question asked of Powell where they said, are you going to buy stocks? And Powell said, that's not in the cards right now, i.e., it's not off the table. And then you heard my friend Rick Reeder tell Europe if they want to stimulate, they need to buy stocks. So the playbook shows you that the Fed and the ECB and the world central banks will go right back to zero. The ECB is negative, right? We have record sovereign bonds, the record number of sovereign bonds below zero yields right now, 13.5 trillion. And it's just going to keep going that way. So what you're going to have to do is buy as much duration as you can and buy assets that have higher yields. So I think yield-based instruments are going to do better, and U.S. multinational corporations with high dividend yields are going to do great. So do I think stocks could go down? Absolutely. I think they could go down. But over the long term, if that's the playbook from the central banks, then you better buy anything that's nailed down.
Sounds like you're sort of laying out a case for the no-yielders, too, like gold, Bitcoin. Are you a fan?
You guys are good at this. Look, gold. Yeah, I mean, is gold going to go up in that environment? Probably so. Bitcoin is such a fascinating concept for me. I've looked at it over a long period of time. We've tried to study. I'm not a technical person, so I don't know the math behind it that well, but I've tried. And I think Bitcoin is successful because the majority of the people that invest in Bitcoin believe that scarcity equals value. And I'm not sure that's the case, but I do think that, the blockchain is valuable and it's going to displace a lot of businesses in the world. And I think it's going to be useful over time. But as Bitcoin becomes more successful, if you're a sovereign nation and you've seen Treasury Secretary Mnuchin comment on this recently, and you've seen, I think, Powell comment on it in the past. I think Bitcoin's success will be its undoing, i.e., today, I don't know what its market cap is of all the Bitcoin, $200, $300 billion, but it's just a play toy at the moment, and there are speculators and people that invest in it, and they've made fortunes. But I think as it becomes more successful, I think the sovereign nations of the world will have to tax it, outlaw it, do whatever they're going to do to slow its growth and potentially stop it. Because when you look at the U.S., we use OFAC at the Treasury to impose sanctions on foreign countries. We use the SWIFT system based in Belgium to impose economic sanctions. And in this day and age, I think economic wars are much more effective than kinetic wars. So we're going to get into a place where Bitcoin makes itself more problematic. But that doesn't mean that it's hit a high. I'm not calling a top by any means. But I think the better it does, the more trouble it's going to have. And I'll leave it at that.